Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to the 8th episode of our InvesTips from the CIO's Desk series. I'm Steve Brice, Standard Chartered Bank's Global Chief Investment Officer and the host for this series. So, you've decided to put your money at work in order to counter the effects of inflation and also to grow the wealth over time. The next step is to start thinking about what style of investing is most suitable to you. The number one question you need to ask yourself is how much time do you want to spend managing your investments? There's really no right or wrong answer to this question. In most areas of the world, of course, more effort generally equals better outcomes. For instance, you don't see somebody becoming the CEO of a large multinational company or becoming a Premier League football player without investing a huge amount of time and effort to develop the skills required to excel. However, this is not necessarily the case with investing. Of course, there are some basic concepts that are important, but once these are learnt, you can be largely hands-off without it having a detrimental impact on the performance of your portfolio. Indeed, many people overestimate their abilities for picking good investments, and therefore a hands-off approach may actually provide better returns for you as an investor, while also having the side benefits of freeing up your time to focus on things that are more important or more interesting to you, such as family, work, or hobbies. Now, this is essentially a passive approach to investing. You set the overall direction of your investment ship and then confine your involvement to regular, systematic investments and occasional tweaks if either the ship gets knocked off course a little by severe market fluctuations or you change your mind on the destination. Therefore, this is not a time-intensive approach to investing. The other extreme, of course, would be to actively manage your portfolio on a daily basis, decide which asset classes to invest in and in what proportion. You would then also need to pick individual stocks and bonds to fill each of the asset class sleeves. Naturally, this is very time intensive. Now, between the two extremes is where you outsource the active management component. This could be picking somebody to decide the appropriate allocation of investments across different asset classes based on their view of the economic, geopolitical, and policy environment. Perhaps this includes picking certain stocks and bonds as well that they think will outperform, or they could use a more passive approach via an index ETF or exchange traded fund in areas where they believe that it's difficult to outperform the index, for example, US equities. The benefits of outsourcing is you know somebody else is monitoring your portfolio on an ongoing basis without you having to. Naturally, this comes at a cost as the portfolio managers need to be paid for their time and expertise. Meanwhile, there is a risk that the portfolio manager will make decisions leading to underperformance of your portfolio. Now, what is the right approach for you is a very personal decision. However, I believe for most people, a personally passive, systematic approach will be optimal, not just from a work-life balance perspective, but also from an investment performance perspective as well. Whether you then decide to outsource some active management is less important. It's more important to start investing as early as you possibly can, rather than focusing on trying to optimize too much. You can always tweak your investment approach at a later stage as you become more knowledgeable about the pros and cons of different investment styles. Well, thanks so much for joining me. That's all we've got time to cover today. In the next episode, we will talk about different areas of fixed income or bond investments. Thanks again, and I look forward to catching up with you then.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.